All right, guys, welcome back to the channel. Today I've got two huge smart money buy signals for you. If you fade these, do it at your own peril. I wouldn't want to do it, and I'll show you the reasons why in today's video. You're joining me, Jason Pizzino, with your macro cycle analysis. We're looking at Bitcoin, cryptos, the stock markets, and the real estate cycle, bringing it all together for you. So make sure you hit that subscribe button if you are new here, as each of the videos builds upon the previous day's analysis, and I wouldn't want you to miss out on that. So let's kick it off with a couple of quotes. Some of my favorites, you may have heard them before. I love to revisit these because it reminds me of how I should be trading the markets. The stock market is never obvious. That goes for crypto, goes for Bitcoin. It is designed to fool most of the people most of the time. It's from Jesse Livermore. Things might seem like they are obvious, but then something gets thrown at us that isn't so obvious. Over the longer stretch, things become a little clearer, and then when you look back in hindsight, you can realize that maybe the way you were trading wasn't the best way and there was a better way to do it. But nonetheless, the reason I'm bringing this up is that we have some significant buy signals, but at the time that they come up, it might not seem so obvious, and it doesn't mean that they are a buy right now. There is a lot of momentum building in the background according to these signals, according to the data. And that doesn't mean that it's going to go up tomorrow. It just means that there is a high chance that we are likely to see higher prices first before we see more significantly lower prices. Sure, the market can drop, like in the case of Bitcoin did over the last 24 hours. You know, it's gone down a couple of % here, 2.5%. It got rejected a couple of days ago at the 50% level, and now might come back to test the next 50% level around 59,500. So I'm not talking about these things in the short term, the day-to-day stuff, but in terms of the longer term, if you have that patience and you've reviewed the data, you've looked at your analysis, done your back testing, you've got signals to get into the market and out of the market, things will become clearer. But again, so it's never obvious at the time, and it might not be obvious until after the fact. That's why we just need to act accordingly and act to our signals the best way we know how. The next thing I want to look at is just something I wrote up this morning. I won't dwell on this too much, but I just want to just go over the first line here. I think this cycle is different from the last, not in the sense that it is this time is different, but just the mentality of investors that I've been noticing, at least when I read a lot of socials and comments, replies from people. I think people who got caught out last cycle believe then they're not going to do the same thing this time. And I hope for their sake, for your sake, if that's you, for my sake as well, that we don't get caught out. But I think a lot of people might be selling a little bit too early in the cycle, and on the way up, maybe they'll also sell out a bit earlier. The way to get around this, at least from my experience, is I like to follow the swing indicator. So the Gann swing indicator here, you can basically follow the trend on the way up in a longer term time frame, maybe across your weeklies, and then you can adjust this to suit your own parameters. And then when it starts to break down, maybe you can take some profits there. When you see crazy moves to the upside, you can take some profits there as well. But it's not a matter of selling everything at one point. It's scaling out, and then if you need to, scale back in if the signals flip to the upside. Kind of like what has happened now to many of the bears in the stock markets. And we can see right now, last 24 hours, the S&P 500 hit a new all-time high price, and a new all-time high closing price as well. Now, the red line is the roadmap for October, what other Octobers have done, basically come down, a little bit of a bounce, down again, and then finishing the month off strong. But this time, we've already seen a new all-time high within the first 9-10 days of the month. Can it come back down? Of course it can. I'm not trying to predict the day-to-day movements here, but just the longer-term view. And of course, my longer-term view now for many years has been that the market is going to go up, and up in a big way. I've talked about it a lot, and it's doing that now. And I think this is on the verge of spilling over into Bitcoin as well. So I've got that data I want to recap with you. Now, just to finish up here with the S&P 500, we've looked at the October volatility. We looked at this particular signal here. So just with the volatility, we haven't seen too much. However, the VIX has done its thing. There has been volatility now on the VIX throughout September and October. So there is a bit of movement there. It's not as basic as it's been through June and a little bit of July, but it has moved, even though the price of the S&P 500 has basically just been grinding around the same flipping price. The 1st of October was at 5,800 points and now closes at 58.40. So really not that much volatility on the price, but the market feels volatile. So that the investors, buyers, sellers, whatever, they feel the emotions, but the price hasn't really done too much. I suspect we're going to see higher prices again towards the end of the year, but just going to this signal, 4 to 5 week volume fill. So low volume, and that started from here, and you can see the price has basically been around the same point. We looked at this over the course of a year or more, and you can see every time there's a bit of low volume on, whether it's a way up or way down, doesn't matter, but you're seeing the low volume here, the market price comes back to fill in that gap of low volume. Sometimes it overextends and then works its way higher. So if that is to be true again, which it has done basically over 12 months now, this area may fill in again in terms of price. So maybe we see a slightly higher, comes back, crashes towards the end of the month, where that's the roadmap usually carries through, and then we start to find higher prices. So that's a quick recap of the S&P 500, just looking at some of my thoughts here for the market. In particular, this one here is for BTC. Let's have a recap of some more data points here. This is for the Dow Jones. Super interesting for higher prices. The Dow Jones Industrial Average has risen more than 60% of the time across the daily, the weekly, the monthly, and the yearly. This is a long-term piece of data. The performance ranks among the best during the past 124 years. For whatever reason, people want to fade very long-term data points here. 60% of the time the market has gone up. It's not a 70 or an 80%, but we find ways to bring the probabilities further on our side. This one's just looking at a general view of what's happened every single day throughout the year. 60% of the time it has gone up throughout these periods. And so the rest of this basically shows you how that's occurred, going all the way back to 1900. So eat your heart out if you want to go back and review any of this data. I'm just looking here, Dow Industrial Average after 60% up periods on daily, weekly, monthly, yearly timeframes, up, 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 up. You can see the green dots here. What happens after these signals occur, 9 months, 1 year, 2 years, 3 years, they are 100% of the time the market is higher. Is it going to happen again? We'll wait and see. It's 124 years of data. The signals only started here in 1959. There were no signals back in 1900 through to the early 1950s. But at least for the last 60 plus years, there have been some pretty reliable sources here. Oh, okay, 2 years it was 83% of the time. My bad. In 2021, we were down 2%. So the signal came there, but of course 2022, the market was slightly lower there. So either way, at least we have one area that it didn't work out. So it's nice to see that it wasn't an exact 100% hit rate. Nonetheless, a pretty high rating here for further upside for the Dow Jones, which would probably mean the S&P would be higher, the NASDAQ would be higher, the stocks leading those indexes would also be higher. And of course, well, I would suggest that Bitcoin might follow suit as well. This is a look at Bitcoin over the top of the S&P 500. And what I've done here is use the S&P 500 as a leading indicator for what occurs next for BTC. And then you can use this as a leading indicator for altcoins. Not all altcoins are going to go up. Yes, I've seen that many times before. Hopefully I don't have to repeat that every single time. Otherwise, you know the deal. The videos get to 30 minutes long. But nonetheless, here we are, just looking at the movement of the S&P 500 as it breaks out into fresh highs, and then Bitcoin following suit in a very quick fashion after that. And the moves really do take off. Of course, I can be wrong. Of course, there's the naysayers in the comment section. That always happens. Nonetheless, as I've said, looking at these periods, so Bitcoin accumulation. Yes, Bitcoin's gone to a new all-time high, but we've now seen about 6 to 7 months of Bitcoin underneath $74,000 going back to March of this year. We're now in October, but the S&P 500 continues to climb higher. And this, if you note, is exactly what's happening. I posted this months ago. Conditions, shallower S&P 500 pullbacks, okay? Q4 party time. We still have 2.5 months to go for Q4, but there are shallower pullbacks now on the S&P 500 compared to where they were in 2022. In 2023, there was a decent pullback here, and then also earlier on in the year, and obviously 2019, big pullbacks. When you get this bull market here in 2020 to 2021, very shallow pullbacks, but the volatility was crazy, right? So people feel like it's going to collapse because of how long it's been going up, just grinding higher and higher. And then eventually it does come down. So it's not like it won't ever come down. But basically, from these points where you get into this next breakout, this next condition of grinding higher, it's basically a matter of time until Bitcoin starts to take off as well. As with anything, I hope I'm right. I don't have the crystal ball to the black side, the right-hand side of the chart, but just looking at the history of it, it seems to be what has happened every single time, especially being in the bull market phase of the 18.6 year cycle before we get to the peak and then the longer collapse, which might bring on the first time where Bitcoin doesn't go on this mega run with the rest of the markets. Maybe in that later half of the 2020s, we don't see these same sort of patterns happen again because, well, the cycle is down, a lot of things would be recovering, and that basically gives us one full cycle of how Bitcoin performs within an 18-year cycle. The 18-year cycles have been working for over 200 years. We're up to about 220 years of data now, so I've got no reason to disregard it. So just looking back at these accumulation phases, roughly 22 to 26 months, and I'm just classing these accumulation phases for Bitcoin in these areas where you can see the price accumulating before big blow-off moves. So you can see it start to break out. And of course, if we zoom right in, then these moves become astronomical, but that is the volatility of a very low market cap coin at the time. Bitcoin was 60 cents here. It went up to 16 bucks, came all the way back down to about $3 on a closing basis, right? So then through that period, you had the accumulation, and then it became a little more public awareness through 2012 into 2013, where it found its peak and then corrected from that point. So the bull section, this little section here, is basically a grind on the S&P. The accumulation is the S&P finding out whether it's time to get going. And then the bear can be the S&P still grinding higher, but essentially it leads to some sort of pause in the S&P 500, and of course Bitcoin feels that pain as well. So 24 months time frame here through 2015-16 before the takeoff in 2017, very clear move for the S&P. Again, 22 months in the 2019-2020 move, and then Bitcoin has this pretty significant move. The S&P 500 just continues to grind higher into that peak, and now we find ourselves in a similar situation. The S&P deciding, at least the investor deciding whether the S&P is ready to go up or not. And in this case, well, it's continued to climb higher. Bitcoin took off as well, and now it is at this grinding point before it maybe the S&P takes off again, and then Bitcoin potentially follows suit. Now I've got an average time frame here of 24 months. That would take us out to next month for this miraculous party time pump that could occur. Otherwise, obviously 23 months is this month, and it's obviously not 22 months. So we can scrap that one off the list. And like I looked at with the other data, the longest time frame there is about 26 months, which would take it out to January of 2025. I don't know if that's going to be the case. I'm obviously looking for Q4 2024, but I've also made mention to Q1 of 2025, where things could continue on from there. And we've definitely seen that with the Bitcoin analysis, where the overall price can continue to move for a considerable amount of time, just like the 2023 move. You had Q4 in 2023, big move, and then Q1 also had significant moves to the upside. So it lasted for about that 6-month period of the momentum to the upside. So that leads me to this quick piece here. This one's just looking at quarters and what potentially happens in a Q4. Maybe it's a little bit biased to the analysis, but I'm just trying to take it apart and find out if there is the possibility of this market going down, and just saying that, well, everything I've done is wrong. I'm trying to look for that to see if what I'm looking at, my analysis, can be wrong. Because there's no point in just thinking that it's only ever going to go up. There's got to be times where it looks like it's going to do one thing and then it does the opposite, which is why I decided to bring this quote up in today's video at the beginning. Stock market is never obvious, and this goes for all markets because they're made up of people. It is designed to fool most of the people most of the time. So my little abbreviations here: TP is turning point, BO is breakout, NA, nothing, of course. And then I've added them up here: turning points and breakouts 77% of the time. So in this quarter, quarter four, 77% of the time, quarter four has either been a major turning point or a breakout. You could class them as a breakout as well. In the case, say, of 2013, you can see it's broken out of those top set, $260, and then got to its final peak at around $1,200. So that's a breakout, but it's also a major, very significant turning point at the end of a cycle. So I've classed it as a turning point. Nonetheless, what we want to know is there going to be some volatility? Is there going to be some very significant price action in this period? The data suggests that 77% of the time we would see significant action in quarter four of the years. Now, the other times, there's been 3 times where there wasn't significant action. Go back to 2019, 2014, and then 2012. So they weren't at the ends of the moves. Basically, all of the breakouts have been in the last year of the cycle, and then they had the turning points, and then you've obviously had breakouts throughout other years in the cycle as well. Here is another one. This one, super interesting, and I'm learning more about this every day. It's from Crowded Market Report. Jason Shapiro, which I've had on the channel before, legit fantastic guy, and also fantastic trader. He's in this book here, so you guys that want to get some books and have a read, Unknown Market Wizards by Jack Schwager. He's been making, he's been making these books since 1989, interviewing traders for the last 35 years. If you think trading is about listening to people on YouTube, of course, I think most of us get that. But the way people on YouTube talk is just absolute fucking garbage over the majority of them. Not all of them, but the majority of people. And the same thing on X. People talk like friggin' morons, but that attracts the audience. So if you get attracted to the moron talk, you're probably going to make moron mistakes in the market. I know it sounds a bit harsh and people get a little bit triggered, whatever, right? But when you read these books, and I haven't read all of them, there's about a dozen of them or so. I've read a handful of them. The way the traders speak and think of the markets is very similar. They're never really talking up the market. They're never really talking down the market. Yes, in YouTube titles, you got to talk it up and down, because no one's going to click on a video if it's pretty much basic shit. Oh, it sounds basic, right? But when you listen to the traders themselves, you can really start to get a feel for how the markets work, and I guess how to view them and learn to work with the markets overall. So that's a little plug for that book. I've got no association with it whatsoever, apart from I really enjoyed them and I learned a lot from them. So this is Jason Shapiro in that book. This is his signal indicator here, Crowded Market Report, just looking at the COT report in his own very fashion. So I have drawn this up on the chart here. So for Bitcoin, there isn't a hell of a lot of data because the futures market haven't been around too long, or the COT reports for them. So it's the commitment of traders. So where are the traders committed? That's essentially what it means, COT. Large speculators in blue, commercials in red, and small speculators in yellow. You can see small speculators are on the long side basically the entire time. They've been doing pretty well. The ones you want to fade are the large speculators rather than the commercials, right? So that's why I'm talking about another area that you don't want to fade the big guys. So you might recall around 12 months ago when Bitcoin broke out of the trading range. There was a trading range through here, 25 to 30K. There were a lot of people trying to short the market from here, and then here, 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 here. Basically, the entire way up to the all-time high. They were short and short and short, just saying it has to come down, etc., right? So looking at it here, the commercials flipped long through that particular period. There's October, and that's when they flipped long, and the large speculators flipped short. So they were getting destroyed all the way up to the peak. Remember, the peak was the 14th of March. Remember, dates in the market will really help you out. They were still short at the top, and the commercials had basically started to die out of their shorts. Now they're still in their longs. They're still net long, but you can see how it drops off at those tops. And that's basically telling you that it's pretty much over. The move might be over, and then it becomes a little choppier here. So it's unclear which direction the market wants to go and which direction the speculators are on. It becomes very, very apparent that either left trading Bitcoin and went into something else that had clearer moves to make money, or they're just waiting on the sidelines. They're still waiting there until they start to enter again. And right now, we're starting to see some entries here of the blues, the large speculators on the short side, and the commercials on the long side. And so that's happening around here. So as I said, they're not on board straight away with the move. They're just getting positioned at the moment. And in terms of the positioning, it seems like you've got the commercials ready to go long again, and the large speculators loading up on their shorts. Of course, it can be wrong. I've said that many, many times. But if I'm just looking at the data, past history, I've got one opportunity here, and a couple of the other times throughout history that I've watched with, it seems like I'd want to be on the side of the commercials more so than the large speculators. Now, there is more to this. This is just a very brief overview. And of course, it's someone else's trading plan, so keep that in mind as well. There's going to be signals to get in and get out if there's invalidations to the move themselves. And of course, one thing that I often look at is the swing indicator and the 50% levels, so that you've got something else to back you up in case things go in the opposite direction. There's no guarantees in the market. As I said, no one knows what happens on the black side. And Jesse Livermore has always said, when things seem obvious, they probably aren't. It's designed to fool most of the people most of the time. If you can hang in there and abide by your rules, you're going to make it in the long term. So that's Bitcoin, and another major smart money signal that I am particularly not fading. Sure, as I said, the market could go down. Bitcoin could test 59K. Maybe it comes back and tests 56K at the 50% level. No one knows for sure. In terms of the percentage moves to the downside, I've just measured the most recent move to the most fearful bottom we've seen in a while. That was the 6th of September. Obviously, pretty big fear on the 5th of August as well. But that particular move was $12,500, a 19% decline from the current peak. To do the same move in a percentage term, you'd need to come down to about $53,500. In terms of a dollar value, you'd have to come down to about $54,000. So if Bitcoin did come down, test these levels, obviously we don't want to see too many closes under 56, get some closes above, it would still just be a measured correction of the previous correction. So there's a lot of people thinking that we're going to go a lot lower. As I said, 54 to 56K, you're within a measured correction of the previous correction, and we're still within an overbalance in time and price to the upside. Longer to the upside in terms of time, and longer in terms of price compared to previous movements to the upside. Now, I've got ETH, Solana, and SUI to get through. I just want to give a quick shout out to the Australian Crypto Convention. Michael and I will be there in November, and we are doing a meetup there on the 23rd, not the 24th. I don't know why they have that there, but on the 23rd. Now, I'll give you guys a little more scope on this. If you subscribe to the weekly report, I'll be able to send you an email with a few more details about this and ticket discounts. A link to the weekly report is in the top of the video description. Of course, where else would it be? So jump on board and you'll receive your ticket discounts over there as well. So taking a look at ETH, it is not giving us any great signs that it wants to go higher. Lower highs, slightly higher lows, but it is really on this lethargic end of its price support here, trading at just on board of $2,400. Should this break down, we're looking at 21, and then potentially somewhere back to 1750 up to about 1950. So if this little level here at 21 breaks down, could be some quick flushes to those levels. Really, from this bounce, ideally you'd want to see it back above 2,900 pretty quick. But because it's just put in lower highs here, it doesn't really look the greatest. And if you invert the chart, I mean, that looks like it's just getting ready for a breakout to the upside, which of course means it's inverted and it means it would be going down. So it's not the greatest look here for Ethereum right now. I don't sound too confident on it, only because it hasn't got back above 28 to 2900. Once that happens, I'd obviously be feeling far more confident in ETH's price projection to the upside. As for Solana, it's also double topping here, and this was the extension that we used a couple of weeks ago, looking at the possible downsides. The next target around 120, that's at 100% move to that, and then at around $99 would be the 150% move of this particular double top, going all the way down to 200%, 77. Now I'm just throwing 78 to 80 bucks out there. I'm not saying it's going to get there, but I'm just watching this double top. Right, it's hit the 50% so far at 140, the next level is 120, and then roughly around 99, 100 if it is to break down from that 109. It's just in a weaker position. That's basically it. Let's take a look at SUI, the biggest mover of any of the big altcoins. It has now been up for 5 straight weeks. 5. Aussie 5. And we're at $2.16 top, and the previous top $2.18. Now, this is the longest stretch that SUI has ever done in its entire history, 5 weeks straight up. Maybe it's time for cooling off. That does not mean straight down. I'm just looking towards any sort of percentage moves that it's done in the past after very significant moves. You got 39% here. You've got about 30% there. And some of these are around 22%. So right now, from the top to the current price is at 13%. 20-ish% takes it to $1.70, 30% takes it to around $1.50, 33, $1.44, and then if it was to do around $39.40, it's all the way back at $1.30. I don't think it's going to get there. Relax, don't scream off down to the comment section. I am just taking it one step at a time, $1.80, down to some of these lows, $1.60, see what happens in the mid dollars. Nonetheless, it's a pretty solid altcoin, so I'm looking for some corrections now for SUI. And that takes me to the end of the video. Like, subscribe. We've got the Oz CryptoCon coming up, so make sure you're on that email list and I'll send you out the discounts for the tickets there. Otherwise, I'll see you guys back here at the next video. Thanks for hanging around. Until then, take care and peace out.